So today we're going to talk about the velocity problem. All right, so blockchain's got some really interesting things that it can do, but it's also got some interesting downsides when it comes to how it actually functions and how it works. So actually, velocity can be viewed in different ways when it comes to blockchain. So there's the velocity of transactions. How many transactions per second can the network manage? The velocity of the data. What does the data do when it comes in fast? Or how do we backlog? How do we manage and make sure that the data is all consistent? And then there's the velocity of computing. How long does it take to do a block in the chain? And that can actually be fairly consistent, but it also has some pretty interesting variables. And all of these have an impact on how blockchain can be used, modified, and how long it takes for the consensus to be built for the transaction to be considered valid. So when you're building out your blockchain, you really do kind of want to think about these things. If you're thinking of investing in it, these are things that you want to consider. So blockchain has a scalability problem. Its transaction speed is slow. Think about grandpa and a walker in the snow, up a hill, in the 30s, doing horrible things, right? Honestly. So based on 2020 numbers, Bitcoin can run about 4.6 transactions per second. That's where we're at right now with the process. So it's about, almost a little under 400,000 transactions per day. Visa, on the other hand, is claiming 150 million transactions per day, or around 1,700 transactions per second. So blockchain, the way it's set, especially for Bitcoin, simply cannot scale to 1,700 transactions per second. It's just not computationally possible. And that's an issue, unless they change something, right? And there's some things along the way that we'll talk about later on that could speed this up. So it's a slow thing. And it's really slow. It's plotty, and it backs up easily. So there's a huge delta between what we've come to accept as our transaction times between Visa and what happens on the blockchain side. If you've ordered online and you pay your button and you see that there's a delay in payment, that can get people a little bit weirded out, especially if you're buying on Amazon or someplace else, and you notice that there's a delay of an hour for your transaction to show up on your alerting system. You're like, okay, well, did it go? Did it not go? And those transaction times really matter when it comes down to it. Can you imagine someone not losing it at the grocery store when trying to buy your groceries, and you got to wait 2 hours because the network's congested? Man, you think people not wearing a mask or something else going on, man, they're just going to completely lose it. And then you've got to wait even more if the network is congested, or you've got to pay more if the network is overloaded as a transaction fee. So yeah, some real downside to that whole idea. And then you have to deal with the block time generation chart. So the interesting part on this one is that in Bitcoin, the optimal time between blocks is about 10 minutes. Right now, Ethereum is under a minute, and Dogecoin is about a minute for each block to be generated. And that takes time because each block is part of your transaction, right? If you're working on a transaction and you're at the grocery store or you're buying something online, you want that really short transaction time. You can shove a bunch of stuff into a block, but that block has to be validated. So anything that's under a minute is generally going to be pretty good in terms of what your transaction time and people's ability to wait for is on this one. So that's a little bit long. So when you go into stats and you actually go see how many transactions average per hour, now we're starting to get into that range where we can actually work on it. So Ethereum is basically, a little over 1.2 million transactions per day. Still not quite anywhere near the 150 million for Visa, but that transactions per hour is starting to catch up. Ethereum cent. So we're starting to get into some really good transaction ability, and then the block time is only about 13 seconds. So the average time between blocks is about 13.2 seconds during this time range. So that's actually pretty good, right? And that's going to be actually pretty handy. And the reward per block is actually pretty crazy too. That's a lot of money when it comes to how much that actually works. So this is actually kind of a profitable for a miner to actually go over. But now we have pending transactions. Okay, so pending transactions is how long it takes to have someone do a transaction in the network. And you can see that delta between high and low, that we end up with about 100,000 transactions just sitting around, just waiting. probably won't get processed. Or maybe a specialized event that happens that will drop that queue down to almost zero, which we have no idea what caused that event at the time. There's nothing in the record or no note on that one, but I would love to know what caused that transaction time to go down from somewhere around the 8th or 9th. But honestly, for a week, that transaction having a backlog of about 100,000 transactions in general is not good, because that means people are waiting. And that means as people wait, that their ability or their desire to actually use this goes away, right? The more people wait, or the more issues they have with that technology, the least likely they're going to use it. The other issue that comes up too is if your transaction just simply is not being processed, that raises a number of other things that go along with it. Along the way. Now, Bitcoin is even worse when it comes to transaction time, right? Our block time is 9 minutes, 21 seconds, but your average transactions per hour, right, is 11,000. And the transactions for the last 24 hours are really super small. So this may just be not enough activity on the network, but the real problem is that you need to make sure that you're getting into that range, right? If our goal here is for Visa level transactions, then we need to make sure that we're actually able to process those and get those going. And those transactions average per hour of 11,000 just ain't going to cut it. It's just simply not going to work here. So that mempool that you've got going on, how many backlog transactions are in there in terms of bytes, right? The aggregate size and bytes of transactions waiting just to be confirmed can be really problematic. And these are just the last 30 days. You're averaging, about 5 million bytes of transactions waiting to be confirmed, or about 5 megabits, right? Which doesn't sound like a whole lot, but when it comes to what we've got cooking inside the network, it can be really problematic just having this stuff just waiting around, right? And again, it's that idea of that transaction has to be validated in the consensus at least 3 times to be considered a valid transaction. And if it's just hanging around waiting, that's not going to do anybody any good. So there's no capacity for growth. All right, we know that a new block is mined every 10 minutes on average, and that's where you want. But there are inherent limits of the defined code process. That means that there's no real inherent ability to grow the transaction speed, as the design of the network precludes speed in favor of accuracy and integrity. And again, this falls down to you can have it fast, cheap, or good. Choose 2. Rule of thumb. You can have speed, you can have accuracy, or you can have integrity. And they went for accuracy and integrity, which is great if you're doing money. Right, you want that. You want that transparency. You want that accountability, but you're not going to get anywhere really, really fast unless we figure out a better way of doing this as a currency. But that also means that using their base software, you're not going to want to use this for anything that has a high transaction speed. You're not going to do this for ETL. You're not going to do this for batch processing. You're not going to do this for IoT. You're not going to do this for telemetry. You're not going to do any kind of blockchain for anything that has a really super high, fast transaction rate. And that's no capacity for growth. So the velocity of the data matters. And this peak and valley is your velocity of the data coming in versus what's able to be processed. And again, I think the problem here is that this queue will never get cleared. Right? Data is coming in much faster than the ability to process. And that is an issue, because then you're going to end up with a bunch of other things, and you end up with what happened with Cryptokitties. So Cryptokitties are really cute, right? Aren't they just adorable kitties that you could buy and sell? So it's like Tamagotchi or like Pokemon or something else, but it's all based on crypto. And it's like NFTs now. You can own it, you can buy them, you can breed them, you can sell them. And the downside is that you use Ethereum to do this. Now, Cryptokitties is a great idea. Let's have a game. Let's have it play in Ethereum, and let's do the rest of it. Now, here's the downside. So when it launched, you had Ethereum pending transactions after Cryptokitties released, which caused congestion on the network. What happens when network congestion causes your prices go up, your transaction fees go up, right? So you end up having other problems along with this. So there was a lot of research done on this, because it was really interesting watching this thing go, and Cryptokitties still exists, right? But some research company went through and went ahead and did really publicly well done research on what happened with Cryptokitties. So they took a look at the 5 million Cryptokitty transactions, and a large number of players flooded the game in the early days, which is normal, right? When you look at Pokemon, you look at a lot of the other games, early adopters are going to be in there, are going to jump in, they're going to have a lot of fun with it, and then they'll leave. All right, you'll have people come in for a while, check it out, there you go. And then you end up with just a few big players that gradually took control of the game. And that's also to be expected, right? This is normal gameplay. Your diehard, your hardcore people that are sitting there, still playing, GTA or Halo, where most of us have moved on from those games, generally took control. So the public attention drew by the message that a special kitty was sold at an extremely high price led to that explosive growth of the game. So everyone saw, oh, wait, my special kitty made money, and now I want everyone to go and play my game. So again, it's that whole idea, that rare Pokemon, getting that special sword or whatever in the game. You end up a lot of people coming in for a different reason. And then the reason why the game just as rapidly declined was that there was an oversupply of kitties. People were breeding kitties right and left and trying to sell them. And right now, if you take a look at the price of the kitties, it's like about 0.5% of an Ethereum thing. The loss of profit in the game prop trading. So when you were selling your kitties, you actually were ending up selling them at a deficit. You just weren't able to sell them for profit anymore. And then the increasing gap between wealth distribution among players. Those people that took control of the game were making money, and they were making good money, but then everyone else wasn't able to make as good of money. And then there were limitations in the blockchain that were basically accounted for as they kind of went through the process. So we're not going to use this for IoT, right? Simply that popularity can lead to an increased prices, both fees, transaction costs, limited supply of people willing to pay for those kinds of things. People will run in and run out of your game or your process or anything else. Too much data easily overwhelms the network, and transactions begin to build up in the queue that might never get processed. And then you end up with orphan blocks or orphan transactions. And that's not what we want out of this network, right? An orphan block is a block that's been solved within the blockchain network, but not accepted due to the lag within the network itself. And that's a problem, because if you're playing around with your mempool and you've got stuff waiting in queue and you're lagging behind other people, right? You end up having two miners that solve for the same block simultaneously, but the one who has the more detailed proof of work is the one that's awarded the block reward. So if you are not the one that keeps on getting the awards because you're working on grandpa's antique hardware, you're not going to be wanting to do this. So anything that requires more processing speed or more power or anything else like that can have a real downside. And again, the more data you throw at it, the more the mempool grows up or blows up, and the more transactions go pending, the harder it is to get those transactions through the process. The level of difficulty will change. Proof of work requirements, again, the more you throw at it, the harder it is for this thing to work. And then there's the velocity of computing. And this one is just computing power, right? How long does it take to do a block in the chain? And again, this is where we kind of want to take a look at that level of difficulty and then the total hash rate. Now, this is total hashes per second, right? And that's in terahashes. That's in tera, as in like billions of hashes, and how many you need to do to guess the right block. So the difficulty is a measure of how difficult it is to mine a Bitcoin block, or just a block in general on the blockchain, right? To find a hash of the given target. A high difficulty means that it will take more computing power to mine the same number of blocks, making the network more secure against attacks, which is great. You want that security. But the difficulty adjustment is directly related to the total estimated mining power as the total hash rate chart. So that total hash rate, again, is the terahashes per second needed to find the right answer for the next block. And the goal is 10 minutes to mine a block. So down to difficulty in hashing that. The hash is the output of the hash function, and the hash rate is the speed at which a single computational action in completing that. So basically what we're saying here is that I'm going to look at one hash and try to find the answer for that and find the blocks through those mathematical puzzle. I need to go look at thousands or millions of guesses to find the right hash for that block and solve it correctly. So that Bitcoin difficulty is a measure of how many hashes statistically must be generated to find a valid solution to solve the next Bitcoin block and earn the mining reward. Now, that is exactly what crypto mining is, finding blocks through context computations, but it's really about guessing the right hash for the next block. And as you guess that that process, the more hashing power is added to the Bitcoin mining network. The difficulty must increase to ensure blocks are not generated too quickly. 10 minutes. All right, so we don't want to take that down to a minute. So in order for the blocks to be generated consistently, the difficulty is increased or decreased basically every 2014, 2016 blocks, right, or about every 2 weeks. So that retarget block, the difficulty is increased or decreased depending on what you've got going in terms of where you're generating those next blocks. And this is system-wide. This is on the network. This isn't just you, right? And if previous blocks were generated slower than the specified block time, then we'll decrease the difficulty. If you're doing it faster, then we'll increase the difficulty. Given that said, that given a consistent hash rate where Bitcoin mining and difficulty increases, you earn less mining rewards, which will then draw you away from the Bitcoin network. So you may just end up saying, oh, I'm out of here. And then there's specialized hardware. So this is some hardware that's coming up, Model KD6 from Goldshell. And it's not yet available, at least maybe, well, when I'm making this video, it's not yet available. But they're basically taking a look at which specialized hardware you've got and how many terahashes that thing will process along the way. This is actually a pretty solid machine. It will actually do a lot of neat things. And the way they've set it up on this process is, what's your estimated profit from crypto mining using this device over the course of a month or a year? And that includes the electrical costs that are going to come with this, because electricity is a thing, your total cost of ownership of this device. So which in turn influences difficulty, because right now, as of today, when I'm making this video, the current Bitcoin difficulty is 24 terahashes per second. The KD6 runs 26.3 terahashes per second. So by the book, the KD6 being specialized can match the Bitcoin difficulty in one system and do a little bit better. And that's just where we are today, right? Now, the next time that we go back through and we'll take a look at our next process on this is, when does that next difficulty reset? And depending on how many people have the KD6 and are running 26.3 terahashes per second, will change how that difficulty is calculated, right? If we're making blocks too fast, then the difficulty will increase. So again, kind of you've got this little arms race going on, right? And that's the relationship to the hash rate and proof of work. And an arms race isn't too bad, but you have that critical metric. Drugging the health of the proof of network is that hash rate, right? That 23, 24 terahashes per second. So simply put, the hash rate shows you how powerful the miners are within the network and keeping that 10-minute block generation time. So the higher the Bitcoin network hash rate, the higher its overall security and speed, which is good. But again, you need to keep their hash rate under control for consistent block production of one block every 10 minutes. So when the hash rate becomes high, the Bitcoin difficulty gets higher as well, making it tougher for miners to mine easily within the network. So when you have specialized hardware like the KD6, you can absolutely expect that your difficulty level is going to go up depending on how many people buy these and how fast they show up on the network. And it's going to blow a lot of people out of the water. You're going to have a dedicated crypto mining process going on here. And again, just like with Cryptokitties, a lot of power will be consolidated in smaller and smaller hands, people that can afford to buy those systems and maintain them and feed them and keep them up to date. So that trade-off, the hardware becomes more powerful, difficulty adjusts accordingly to keep the inbuilt 10-minute block rate. For Bitcoin, it's an arms race. And again, you're about evenly matched. As difficulty changes, algorithms change, code changes, hardware changes, and everything's kept in equilibrium. It's a great way of also solving that double spend and consensus issues. And we're going to go over those later as part of the security and integrity. But you need to make sure that when you're doing this, you've got those velocity issues taken care of and you're taking a look at those. So part of this whole thing, when we're going through it, again, is that velocity of transactions. How many transactions per second can you actually do? What is the expectation in a modern banking system if you do Bitcoin? Or what is your expected process going to be? If you're doing something like healthcare telemetry, this ain't gonna work. Voting, maybe. If you've got a slow plotting process, it would work. So college transcripts, educational attainment, something where we're only doing something once or twice a month, anything like that. Maybe sports scores, the final sports scores, right? You're not going to do this as IoT sporting information along the way. So again, it's that velocity of transactions. What can you support per per minute, per second, per hour, per day. Velocity of the data, what to do when the data comes in too fast, what does your queuing look like, what does your memory pool look like, and how are we actually processing the cache, right? Who lingers, and then what happens with orphan transactions. And then the velocity of the computing. How long does it take to do a block in the chain? How many terahashes are you having to guess at to get to that next block? And what kind of computational power are you bringing in? And then what does that computational power do in terms of energy costs? And there's a whole argument about how ecologically damaging Bitcoin mining is and everything else. And we'll kind of cover that in a little bit later as well. But in this one, we're just looking at the velocity of the computing and what does it take to actually do a thing. So that was it for this lecture. Thanks for coming. And again, if you like, subscribe, the usual that you would do with this. I will see you in the next lecture. Thanks much.